in Netflix. So the way that, in full transparency, I don't love earnings trades. I like to wait for after earnings. That's just my personal feeling. Some people do great with earnings trades. More power to you. But what we see with Netflix right now is a 7% implied move. So I'd just like to get a lay of the land here. Netflix responding pretty well um, to the market rally. So if we look up and down 7%, the 925 area, let's call it, and then to the downside you got looks like about 800. So 925 to 800 is basically what that move is. And the reason I'm rounding to those, I want to round to the big strikes because I just want to go to Equity Hub. And oftentimes in Equity Hub, before I pull this up, you'll see that the big options positions sometimes reduce sharply outside of those implied moves. And I've had a conspiracy theory that there's a correlation there, but let's just see. All right, so in this case, we have a really big position at 900. And then what you see here is, can you make the argument that positions really start to dwindle under 825? Maybe. Looks like down around 800. So these gamma curves with the range of the stock over the last month or two, right? There's a lot of gamma, even all the way down to 700. So that I find to be interesting. And there's also a lot of gamma or fairly large positions up to 1,000. When I say there's a lot, what I'm looking at is inside of the legend there. You can see there's about $23 million of gamma at calls and puts, right? So these are fairly large positions, and these curves, they don't really flatten out, and I know this is somewhat subjective, really, until these bounce. So what I find interesting about that is we have a 7% move implied. Excuse me. With a range of 800 up to, what was it, 925, right? So, under 800, very few positions, I shouldn't say very few. I'll tell you what my gut is on this. The gut is that there's enough gamma to the upside and downside that we could move more than 7%. That's what this seems to say to me. And if we go and look at the volatility space, if you remember with the example of Apple, right, where the positions just disappear under 200, for example, if Netflix had a tighter range there of gamma positions, then I would think that the range would be smaller. The other thing that I note about this is look how flat the skew is. I mean, this is, all the way up through 1,000, which is, a good 10% move really in each direction. This skew is very, very flat. So what this tells me is that, if there was a really sharp skew, like the green line went like this instead, then you go, okay, like this call side is really rich, or if the put side was up and this put side is really rich, we could, buy those options, but, bet against skew mean reverting. So I would, look to bet on skew mean reverting in those situations if it was statistically very elevated. In this case, it's not. Vol seems, the skew seems very, very flat, which is interesting. So if you think that the stock may move more than the implied move, which is kind of the spidey sense I get from positioning, yes, you think vol is going to contract in this situation, but there's not, the skew is very flat, then maybe you could set up diagonal trades, ratio trades, different things like that would bet on, okay, let's say we get the vol contraction just because earnings reported, but if there's a big enough move, then maybe skew should shift. So if we look at the money implied vol, and you can, again, look at this and say, okay, in all likelihood, vol is going to go, or at the money implied vol, if I look at the February contracts, for example, should go from 43, 44 down to 22, right? That's what should happen after the earnings event. So then I could price the at the money option, and then I can use that to figure out if I want to be long out of the money options against that, or maybe I'm setting up a counter trade that bets on, a diagonal trade that bets on either calls or put out of the money options, raising in value relative to the at the money, again, off the idea that there is some type of more of a move than what the market anticipates. This is the stock has had a pretty good range over the last couple of months. To me, it feels unusual that there's such, gamma is just so spread out. And when I've seen this, and those of you who are thinking for a while, when you see this gamma so spread out, it typically means that we can get these bigger moves. Oftentimes, it's kind of an interesting phenomenon that tends to happen. So I don't know that I'd really want to be short vol in this name. When you're betting on a 7% implied move, I think the move could be closer to 10%. Sometimes you just see, look, all the options positions are tight. Let's bet on just vol contraction and the earnings move being within the implied move, right? Which again is 7%. Right now, it feels like we could have a bigger than 7% move. Again, which is right here. So if we look at the earnings chart, we blow this up, we can see some of the other names that are set. And we run our implied move off of the shortest dated options, right? So we're trying to take in the next weeks or the 0 DTEs.